All right, what's up? Welcome back to the channel, everybody. We're gonna have a rate decision here in a minute. Bitcoin looked like it was gonna have a good day today, this morning, and then a little bit of news dropped where Trump was like, "We'll keep being like this for the next couple months if we have to," like almost ignoring the 60-day thing that's going on, and Bitcoin fell. Oil broke out. Dollar is still trading at high of day. Still trading at high of day. So, I mean, we'll see what happens. It doesn't really look great for Bitcoin. Bitcoin is currently trading just above yesterday's low. And then you've got Strategy's cost basis sitting down here at 75,284. Or, sorry, 75,528. That's a pretty nasty move lower here. First thing this morning. It's just been a straight down move. Straight down pretty much all day. Yesterday's low, like I said, it's coming in here, and then this line right here is going to be March's high. So we would obviously love to see Bitcoin hold support above this level, indicate, upside continuation on a monthly basis. So we'll see. Does it wick down below yesterday's low and then start to press? Now, here's the thing. Today, there is a rate decision, and the news comes out at 2. That's when you get the actual decision, and then you got a press conference at 2:30. So, I mean, the majority of everything has been done, but we do know that price can sometimes use big news events to move much more. So all of this could be retraced. It'd be nice, but as long as oil is ripping and as long as the dollar is ripping, or at least oil, you have to be careful about wishful thinking. Oil is structured very bullish and very bullish. So whenever you're trying to look for shorts on it, when something is this bullish, you tend to get ran over many, many times. Sellers today in oil have attempted to short this in 3 major places. You can see right here was the first place. This is just a prior swing low. Well, it's not a daily swing low. Oh, yeah, that's right. I moved it. Never mind. But as you can see, here is this wick low right here. So basically from this wick high to this wick low would all be considered an inefficiency zone. So I would assume that's why most of your sellers started to sell here at the beginning. But as you can see, that just allowed price to rip higher. And then again, here at the bell at 9:30, another huge group of sellers come in, try to knock this down, and higher it goes. Now, the blue is buying pressure. So it actually looks like there has been more buyers at these levels. But when you get big giant moves like this, when the nodes swell like that, it's two-sided trade, and usually it is more buying than selling because you're stopping out the sellers from the previous highs. But we'll see what happens here. We got 8 or 7 minutes now until we get the news. The news is going to most likely be a nothing burger, as the prior rate cut, or the prior month, or the prior Fed rate decision was 3.75. This forecast is at 3.75. Today is Powell's last speech ever. So, I mean, we've basically been doing these live streams forever. Might as well give Powell his last one. As he will be no more after this one. We'll be listening to a different guy. Moving on. But nothing is anticipated. So, being as nothing is anticipated, I wouldn't expect a whole lot more bullish pressure out of oil. And FOMC rate decision shouldn't have any effect on oil whatsoever. But be as it is a massive liquidity day, being as it is a lot of people are trading the news, we could see something happen here. And it's a large range today. This is a legit breakout on oil. It's been very bullish. The last price we were interested in selling was all the way down here. The last upload I put out, I said if oil is trading above this price, you shouldn't be looking for shorts. If you heeded that advice, you haven't been getting ran over with oil. Anyways, back over here to Bitcoin, as that is the main thing everybody has their eyes on. I'm short Pingu. I got short Pingu this morning up here. Oh, it's down pretty good here. I'm not sure if that is where the weekly 21 is setting or not. Let me pull it up real quick just to make sure. It's really close. That's where it was last week. So it is testing the weekly 21 exponential today. Or retesting it, I should say. And even though Pingu is trading above its yearly opening range, it is still under the daily 200. Excuse me. Good morning, and we're back. Let's effing go. Yeah, we're back. Good day, Bradley. How are you doing, my friend? Spicy chicken sandwich while listening to Spicy Rate Decision. Nice. Nothing wrong with a spicy chicken sandwich. Good afternoon, Drew Dickman. Good luck, traders, says Nick. Good luck, everybody. Yeah, if you're trading, make sure your risk is mitigated. If you're buying this, I think you're probably a little bit early. I don't know. I would be trying to buy into that bearish pressure, but it's pretty severe here. If we look at the volume, cumulative volume delta, you don't have any like major sell side days where the sellers were in control for most of these days throughout here, from all the way over to here. You can see how there was only like really 2 days that stand out where the bulls were in control, and the rest of the time the sellers have been in control, but it's not been like a massive controlling force like over here. You can see how much stronger these bears were back over in here compared to what they are now. You see what I mean? Much different. Much different in the size of the move and everything. So what I'm trying to say is it could still bounce from here after liquidating yesterday's low, but we'll see. This is Sailor's cost basis, Strategy's cost basis. This is where we want to see price hold. We don't really want to see it break down much lower than that. Because if you're back under this, then you're putting the pressure back on Strategy. And that's a risk. That's a risk. Tomorrow, you're going to have EU GDP and the BOE rate decision. And then the BO or the ECB rate decision will be on Thursday as well. So you're going to have a core PCE from US tomorrow. So tomorrow you're going to have a lot of potential news out there too. You're going to have a BOE, which is the Bank of England interest rate decision, then the Europe ECB interest rate decision, both in the same day. You've also got GDP for Europe. You got an inflation print coming out of the EU. You got core PCE price index coming out of the US. GDP also. A lot of news tomorrow. And then there's your 2 o'clock candle. And I haven't got the data yet, but the dollar is pushing. Here comes the push on the dollar. So the pause is still happening. The dollar probably wants to fill this gap up here. It is a large upside gap. Does Bitcoin liquidate yesterday's low, or does it go from here up? Let's see what oil is doing. Not a lot. Okay, so, and we're also curious to see if the BOJ intervenes. But I mean, are they going to do that during an FOMC rate decision? Probably not. I didn't catch, I mean, they could. They have in the past used US major newsprint or major news releases to intervene. I didn't catch the BOJ press conference. I wish I would have, but it slipped my mind to do that. So this is the asset that is putting pressure on the dollar, obviously. USD's bullish because the carry trade is still out, still running strong. Today is a breakout of a near-term range. It's still got a long ways to go to get up to the highs, but your resistance level on the day is right here. Daily res. So this is a breakout. Seems like it would go well above this point first, but you are above 160 up here, and they did intervene in the past at 160, but they could be waiting to 165 to intervene this time. We don't know where, when, or at what price. All right, so here goes Bitcoin looking for a fresh low day. Bears are licking their chops. They're thinking it's over with. Bitcoin's going back lower to make fresh yearly lows. But this channel is a bearish pattern, not a bullish or a bull bottoming formation. I don't look at chart patterns. I think they're irrelevant and useless. I am a technical trader that doesn't use chart patterns. It is what it is. I think price is king, so I look for my trading decisions based on what price is saying to do. And on the anything lower than the 12 hours, so from 8 hour and under, you have a full-on bullish flip where you've gotten golden cross, where your 50 EMA has crossed back above the 21. I mean, the 50 crossed back above the 200. On the 12 hour and daily charts, you're still, price is still well under the 200 day. So obviously reversals happen on the intraday charts before they happen on the larger time frame charts. A lot of selling pressure today. Not a huge down day, though. Bitcoin isn't even down 1%, so it could get way worse. It could get way worse. I'm also short euro dollar. I got short euro dollar right up here. Based on the yearly opening range. Looks flawless in hindsight. Technical analysis does work sometimes, obviously. You just need a 50% hit rate and a good risk to reward to be profitable in this game. Don't need macro analysis, on-chain analysis. You don't need any of it. You just need to know where things are and what direction the trend is heading. Unfortunately, right now, Bitcoin is in a really strong downtrend. And in a large period of consolidation, we're trying to see, is it accumulation or distribution? Only hindsight will we know. Only in hindsight will we know if it's accumulation or distribution. But if you are a seller, you should have been looking for shorts at February's high. If you are a buyer, I think buying up here is a little risky. It's an aggressive move. I started buying at 67K as that's the midpoint of this entire accumulation range. I think that was the better place to be a buyer. I'll be a buyer again at 55 if it breaks down and makes fresh year lows. But I don't think we're going to make fresh year lows. We could. But momentum has already signaled oversold. We do think we do think that we could go down much lower, though. I want to see what happens around the 4-hour 200 EMA. So basically that is down here. We've got a big level down here. I want to see Bitcoin hold here if it breaks down here. I would love to see it not even get back under strategy's cost basis. It's spent a lot of time trading above it. That's nice. I would love to see it stay above that. If it could, I think that would be a pretty decent bullish signal. So one hypothetically could buy this move today. Just make sure you have a stop loss just in case it keeps going lower. As the selling pressure is obvious here. There's your fresh day low. And briefly, we are back under strategy's cost basis. Let me see if that daily 21 is supposed to be there. Looks good to me. 75.3 is where it was yesterday. We're at 75.308. So we're $8 too high, but that's fine. $8 on Bitcoin is nothing. So you're actually testing the daily 21 here. Really close to it. That's a pretty good move under the low. So be careful trying to buy into bearish pressure like that. And there's a 75,000 big figure retest. That is downside continuation. Now you're liquidating, close to liquidating this prior swing low that came in on Tuesday, April 21st. In terms of the 3-day chart, you've liquidated the last two. So the next liquidity pinch point on the 3-day chart is all the way down here. So this chart isn't going to be very helpful in terms of liquidity. Yeah, it's just a daily swing high. I mean, swing low. It's not a weekly swing low. If you take out this weekly low, that would look pretty nasty. It would look pretty nasty indeed. It wouldn't be the end for the bulls, but it wouldn't look good. This would look like a rejection of February's high. The reason February's high was so important, if you weren't with me Tuesday, it's simple. This is the last place on, so like essentially February's high is the last liquidity pinch point on a monthly time frame for a long ways. So basically looking at the monthly, it's the last monthly swing high. The next monthly swing high is all the way up here. So at any point in time when price is trading above February's high, that literally means anybody that's been short or got short since February has been stopped out of this market. If you're above this, then you're threatening a run up to the next liquidity area. And that's a long ways away. So I did want to see a breakout above that. And we still could ultimately get, I mean, it's a double top up here. And this is a lower high. So if it was going to make a run higher and be a breakout to the upside, 3 days of pullback would be more than, yeah, it'd be good enough, I'd say. 79.3. This is also where the short-term cost basis is for everybody that looks at on-chain data. This is your short-term holder realized price. And according to this, it's saying that it comes in at 78,865. So just a hair under 79K. And then February's high is also just above 79K. So clearly $79,000 is resistance. Now that the bears think they have it in control, it would be very easy for price to bounce back up to there. I just don't think it will be able to do it as long as the dollar is pushing up. So I have a bullish bias on Bitcoin here. But because the dollar is so bullish and because oil is so bullish, it's putting pressure on risk assets. Didn't really put pressure on the SPY, as the SPY has been bullish for the last 4 weeks. But I mean, let's be honest. This thing got overbought, so it needs to pull back. But in terms of Bitcoin, like the dollar has literally been keeping it down. So it'd be hard for Bitcoin to bounce today if the dollar doesn't retrace. And the dollar is currently at resistance, but the structure looks good for an upside move. So going out here to the day chart, we've been trading pretty much at these, ignore this. It is a real move because the euro did go down, but you can see these highs right here, these three highs So this has been resistance. But the bears have not been able to get anything going. They have not been able to make this thing go lower. So whenever I see that happening, I look out above. What's above us? Well, you still have a pretty wide gap. Even if you consider this as a halfway point fill, you still have a gap of this magnitude still overhead. Well, I think that's what's drawing price. Which is why Bitcoin has been weak. No change in rates? Nope. We knew there wasn't going to be a change in rates. It's his last meeting where he's going to be setting as chair anyways. But I mean, nobody anticipated a rate change today. Earlier this morning, we looked at the FedWatch tool, and it was literally setting at 100% chance, a 100% chance that there was not going to be a rate cut. I have never seen a 100% chance. I've seen 99.9 or 99.7, never 100. But this morning it said it was a 100. And next month, or the next rate decision in June, it's not next month, it'll be June the 17th. This will be Kevin Warsh's first meeting. And even then, there's a 98.8% chance that they don't do anything. And he's a rate dove. He wants to cut. But Bitcoin has liquidated yesterday's low. We've got 50 or less than 15 minutes, 13 minutes until until the news conference, press conference. Ick, says Bradley. Yeah, it sucks. Oil is a pain in the ass. It is. Bitcoin was created in 2009 because of the TARP bailout from the last secular bear market in 2008. This means Bitcoin has never seen a secular bear market in legacy markets, only cyclical. Okay? We're not in a secular bear or whatever. We're not in a secular bear market either. In risk markets. They're at all-time highs. I mean, that's going to be subjective. Secular, it's going to be cyclical, secular. It's going to be subjective. But I agree with everything else that you said. So I made a post this morning with a guy who was very accurate and in predicting whether or not there would be a bear market, or not even a bear market, just a recession, or worse, another great financial crisis because of I don't know, whatever, right? The war. But here, listen to him for yourself.
Crisis. There has been this weird competition to see who can predict the next financial calamity. And the latest competition has been the focus around private credit. Here, Hank Paulson is focusing on the federal deficit and the high levels of debt to GDP.
Specifically, what he's talking about is former Secretary Hank Paulson was on Bloomberg last week, and he said that we need to, or the American this administration needs to build a break the glass type of emergency plan just in case the bond market breaks. Right? In other words, stirring up fear and panic. And that's what somebody asked him a question. Does he think a recession is near because of Frank Paulson?
in the United States. The federal debt to GDP level is at an all-time high of 125%, and some people are worried, like Paulson, that investors will just stop buying U.S. Treasuries. Now, Hank Paulson is chiming in on this one, but first of all, what I would say is that with all due respect to former Secretary of the Treasury Paulson, he's not so great at predicting a crisis. On August 1, 2007, Paulson stated that the market impact of the U.S. subprime mortgage fallout is largely contained and that the global economy is as strong as it has been in decades. Looking back, that's about as bad a prediction as you can get. But everyone makes mistakes, so let's focus on this prediction. It's not like Paulson is the first to make such a prediction. People have been predicting the same thing about the impact of the deficit for 40 years. 40 years is a long time to predict a calamity. 2 points here. First, Japan's debt to GDP ratio is 240%. Almost double the United States. And Japan's debt markets function quite well. Second, the price of this risk is interest rates. If the market was worried about the deficit, truly worried, then the 10-year Treasury yield would be considerably higher. Instead, it's been in a range of 3.9 to 4.5% for the last several years. The commentators of this calamity never seem to ask why their 40-year predictions have not occurred. And I think I have an answer for that. The global financial system functions on treasuries. Banks park money overnight with each other through a multi-trillion-dollar global repo market that only uses short-term treasuries. When large institutions need to park significant money for any duration, they buy long-term treasuries. Why? Because there is no alternative, at least not yet. If and when there is a large liquid alternative to treasuries, I will become more worried about the deficit.
Boom. So no, no. He is not thinking that a recession is coming. Banks have already reported earnings. We're seeing tech companies report earnings right now. So he was one of a very few people that predicted a recession of epic proportion is coming and the whole bottom could fall out of everything because of the housing market. He was one of the few that predicted that. He's not predicting a calamity anytime soon. But yet you have all these other people on social media who are. So I get why people are scared, right? I get it. But they're focusing too much on the negative and not the positive. So if you haven't invested in the last 40 years because you were predicting calamity or massive risk in the markets, and you've missed out on a lot of money. And I just don't want my audience, my community, it's a small one, and I'm grateful for it. I don't want anybody to fall victim to a bunch of the sky is falling people out there. I don't want them to be too confident that another GFC is right around the corner, because it's not. There's nothing else. If you had trillions of dollars worth of wealth, where would you park it right now? How would you keep it safe? You know what I mean? There isn't but a few things that you could buy to keep your trillions safe. It can only be metals, gold, silver, palladium, copper, aluminum. You don't want to buy food grains because grains, they go bad, right? There really ain't much. You've got treasuries, you've got housing. But as you can see in China, what's going on in China right now, housing prices are falling like a ton of bricks. I don't know if it's refreshed. It won't be here. It has refreshed. I'm not going to be able to find it. Oh, wait, I can just go right here because he also posted it this morning. But here is China, what's happening in the China housing market right now. So even if you park all of your money in real estate, even it will get hit. Nothing will be safe if you see a GFC. Nothing will be safe. Everything will get massively destroyed. And if it gets too bad out there, where you have a reset, so to speak, well, then money won't matter anyways, because then you'll be trading things like cotton swabs for a can of corn, or a can of corn for an ounce of gasoline. It'll be right back. It'll be reset back to the old days. So great financial wealth won't even be a thing anymore. So just be careful out there falling victim to all of that, nonsense. Too much of it is a bad thing. The banks have reported earnings, and we're not seeing if the banks are more exposed to credit risk than any other industry in America. And they're not seeing a large trend in defaults. They're actually doing fine. Like, it's a non-event. Private credit was overexposed to software. And some software companies are going to get destroyed because of AI. Like Chegg, for instance. Do you guys remember CHG or CHEGG was a company? I don't know what they did, but I know that since AI came out, their company, which was a publicly traded company, has lost 99% of its value. There will be more. But the big ones like Microsoft and, other software companies will probably be fine. It's software as a service is taking a massive hit. So private credit has taken a beating because of that. They were overexposed to that one sector. And overexposure in one sector is a very bad thing. You cannot put all of your eggs in one basket, of course. So just be careful. Make sure if you have a lot of wealth, split it up. Buy a little Bitcoin, buy a little gold, buy a little silver. Don't get too heavily exposed in the metal market though, like copper and aluminum. Those things are commodities. Gold is mostly looked at as an inflation hedge. And then one of the guys that I put most of my respect on in terms of respect, how good of an asset manager he has been and a macro trader, Paul Tudor Jones. And that man literally said in the last interview he did this.
Bitcoin is unequivocally the best inflation hedge that there is.
Bitcoin is unequivocally the best inflation hedge that there is, better than gold.
More than gold, because Bitcoin is finite.
Bitcoin is finite. Gold is not. The supply of gold is manipulated by miners. If they need more gold, they will go make more gold. Even diamonds are man-made nowadays. So, yeah, but I mean, we have to invest. We have a lot of money. We have to put it somewhere. We got to put it somewhere. So I understand everybody's concern. I do. Nobody knows where to put it all. Where should we put it? Where should we put it? Everything. Nothing looks great right now. Nothing looks great. Bitcoin. Now, I don't want to leave you on. I don't want to lead anybody on. He then went on to say that there are two massive risks associated with Bitcoin right now. One of them is AI. The other is quantum computing. So just leaving that part on is kind of manipulative, because he then went on to say that things aren't looking great out there, right? So that's not a negative statement, though. I guarantee you, I would bet a lot of money on it that Paul Tudor Jones has at least 2 to 5% of his wealth in Bitcoin. He doesn't have 80% of his wealth in Bitcoin, but he's got some of it in Bitcoin. He doesn't know what is going to happen in the future. So he has to split it up over a lot of different assets. All right, so meeting in 1 minute. I need a link Let me go get it here.
I built a Wix website overnight, and it helped launch my career as a sketch artist.
All right, let me move this over for now until he shows up. So Bitcoin heading back down to the lows. Pingu also liquidated the lows and bounced. I'm short from up here, so I mean, obviously if it keeps going down, I'll be fine with it, but it could bounce from here. Big level of support. And Pingu for the last 10 days have made higher lows. We looked at this earlier. So today's the first day that it's made a lower low in 10 days. The last time it made a fresh day low was right here. This even this day was a higher daily low. So higher low, higher low, higher low. All of these, every one of them, all the way to right now, was a higher daily low. So first lower low in a while. So if Bitcoin is going to go down and check the bottom of the range, Pingu is in the same kind of range. Okay, so here is the dude.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy has been expanding at a solid pace. While job gains have remained low, the unemployment rate has been little changed in recent months. Inflation has moved up and is elevated, in part reflecting the recent increase in global energy prices.
Sorry.
Today, the FOMC decided to leave our policy rate unchanged. We see the current stance of monetary policy as appropriate to promote progress toward our maximum employment and 2% inflation goals. Developments in the Middle East are contributing to a high level of uncertainty about the economic outlook, and we will remain attentive to risks to both sides of our dual mandate. I'll have more to say about monetary policy after briefly reviewing economic developments.
There we go.
Recent indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand at a brisk pace.
Nice.
In contrast, activity in the housing sector has remained weak.
Yeah, a little bit.
In the labor market, the unemployment rate was 4.3% in March and has changed little in recent months.
Which is good.
Job gains have remained low. A
Job
good part
losses
of the slowing
have
in the
remained
pace of the
low.
job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including job openings, layoffs, hiring, and nominal wage growth, generally show little change in recent months. Inflation has moved up recently and is elevated relative to our 2% longer run
No,
goal.
I know you wasn't trying to incite
Estimates
fear.
based on the
I
Consumer
know.
Price Index and other data indicate that total
Many
PCE
other
prices
people are,
rose
though.
3.5% over the 12 months ending in March, boosted by the significant rise in global oil prices that has resulted from the conflict in the Middle East. Excluding the volatile food and energy categories, core PCE prices rose 3.2% over the 12 months ending in March. This relatively
Your comment just reminded me that I wanted to show what had been said from Steve Eisman. That's all.
high rate largely reflects the effects of tariffs on prices in the goods sector. Near-term measures of
Dollar is
inflation
breaking out
expectations
pretty
have risen
good
this
here.
year, likely
Pretty good here. So Bitcoin most likely will, dollar is, as long as it's trading above this, you are trending. So it did liquidate that price with the last 30-minute session and this 30-minute session, it's still climbing. So that's an issue. That could put pressure on Bitcoin.
Because of the substantial rise in oil prices.
Yeah, and
Most
that's
measures of
another
law-
thing that we're keeping an eye on here for this press conference, as that is the other half of this, what is putting pressure on Bitcoin? What is keeping Bitcoin down? That's the question everybody keeps asking. If buying demand was so great, why is Bitcoin not breaking out? Risk markets are back at all-time highs. Well, I'm answering that question for you. It is the US dollar and oil that is essentially keeping pressure on Bitcoin. I firmly believe that if oil were to roll over with the US dollar, that you would most likely see Bitcoin start to rally, and it would be an aggressive supply shock short squeeze rally.
Longer-term expectations remain consistent with our 2% inflation goal.
And I could be wrong.
Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5 to 3.75%.
Nice, thank you.
The economic outlook remains highly uncertain, and the conflict in the Middle East has added to this uncertainty.
Yes, it has.
In the near term, higher energy prices will push up overall inflation. Beyond
Yes, it
that,
will.
the scope and duration of potential effects on the economy remain unclear, as does the future course of the conflict itself.
Yes, it is.
We will continue to monitor the risks to both sides of our dual mandate.
Yes, we will.
We are well positioned to determine the extent and timing of additional adjustments to our policy rate
Yes,
based
we
on
are.
the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. This is my last press conference as chair, and I will close with a few thoughts.
And we are sending
First,
you
I want to
out.
congratulate Kevin Warsh on his advancement out of the Senate Banking Committee this morning. This is an important step forward, and I wish him
In his
well as
career.
that process continues. The Federal Reserve exists for one fundamental purpose: to foster the economic conditions in which American families and businesses can thrive. Stable prices, a strong job market,
That's
and a
your
financial
mandate.
system they can depend on.
I don't know if that's what it exists
Every decision
for.
we make, whether about interest rates or regulatory and supervisory matters or other issues, is made
The skeptical in me would say something extremely negative to that. Obviously, when they invented the central bank, it was not with the little man in mind. I don't care what you stand up and say today, but when it was invented by, I don't know what, 8 or 10 of the world's richest individuals, I think they did it for themselves more.
in service of that purpose. Our decisions reflect the collective judgment of the Board of Governors and the Federal Open Market Committee, colleagues who demonstrate analytical rigor, principled judgment, and a genuine
I would like
gotta
them to see
have
them
the best
abolish the Fed. I don't think we
be the
need the
best.
Fed. Obviously, they're not going to do that, and it would probably be very bad if
More
they
boxes,
did. Oh
more
my
options.
God!
Grainger has over 1,700 box types in stock and ready to help.
This institution is resilient, capable, and staffed by professionals of extraordinary talent and exceptional dedication. It has been a privilege to serve alongside so many great public servants at the Board of Governors and around the Federal Reserve System. The Fed's work is only as effective as the public's understanding of it, and you, the press, are essential to keeping the public informed about what we do and why. The people we serve benefit from your careful reporting.
Now, why
I
are you
welcomed
sucking up to
the
the
announcement
press?
last Friday by the U.S. Attorney for the District of Columbia that she had closed the criminal investigation. She also noted, however, that she would not hesitate to restart the investigation. Over the weekend, the Department of Justice provided assurances that they will not reopen the investigation unless there's a criminal referral from the Fed's Inspector General. And, absent such a referral, if they do appeal the recent court decision, they would not seek, as part of that appeal, to restart the investigation or send new subpoenas.
Well, you're going bye-bye. He doesn't
I've
need
said
to
that I
threaten
will
you
not
anymore.
leave the board until this investigation is well and truly over.
It is
with
over.
transparency and finality, and I stand by that. I'm encouraged by recent developments, and I'm watching the remaining steps in this process carefully. My decisions on these matters will continue to be guided entirely by what I believe is in the best interest
I don't have an issue with Powell. I think he's been a pretty decent Fed chair. He's been pretty good as far as keeping us up to date and being upfront with stuff he can say. Obviously, there are things he cannot say. I think that was a dick move on Trump to try to force Powell's hand. Powell isn't the guy that is making the decision to cut rates or leave them. He does have a lot of sway, so he could have been a little bit more dovish. I get it, but threatening him with criminal intent, that is bad. That is no difference. That is no different than what the Democrats did to him. So, I mean, I think it was a dick move. I have nothing against Powell, but I wish he would have been a little bit more aggressive on cutting rates before we got to where we are. He could have been way more aggressive in 2025 than he was.
Of the institution and the people we serve. After my term as chair ends on May 15, I will continue to serve as a governor for a period of time to be determined. I plan to keep a low profile as a governor. There's only ever one chair of the Federal Reserve Board. When Kevin Warsh is confirmed and sworn in, he will be that chair. Once sworn in as board chair, his new colleagues will elect him to chair the FOMC as well. As I regularly point out from this podium, our success in delivering our goals matters for all Americans. I'm confident that the Fed will continue to do its work with objectivity, integrity, and a deep commitment to serve the American people. Thank you, and I look forward to your questions.
Have a good one, Mr. Powell.
Thank you, Mr. Chair. Appreciate the kind words about the press. Often doesn't come from the podium in different places.
Yeah, you shouldn't have said that. The press is a bunch of freaking lying vultures, dude, and you know it. All of them, or 90% of them. There are a couple, nice ones, but the majority of them are jackals.
Can you talk about what is gone into your decision to remain on the board? What kind of criteria are you weighing, and how long might you stay? Thank you.
Sure. So, my concern is really about the series of legal attacks on the Fed, which threaten our ability to conduct monetary policy without considering political factors. And I want to note here, this has nothing whatever to do with verbal criticism by elected officials. I've never suggested that such verbal criticism is a problem, and neither has anyone else here. But these legal actions by the administration are unprecedented in our 113-year history, and there are ongoing threats of additional such actions. I worry that these attacks are battering the institution and putting at risk the thing that really matters to the public, which is the ability to conduct monetary policy without taking into consideration political factors.
Yeah, it
is so important for our economy, for the people that we serve, that they can depend over time on a central bank that operates that way.
The dollar is pushing up to higher prices, guys. It doesn't look good for it to roll over here with this press conference. He isn't going to say a whole lot more. He is being, the same hawkish guy he's been the last 2 years. And that's keeping pressure under the dollar. It's working great for my euro short, but it's not helping Bitcoin at all. Now, with that being said, Bitcoin has not fallen any lower since he started speaking, but it's not. It looks like it's going to.
Free of political influence. It's part of the absolute foundation of this amazing economy that we have. It's just one of the many reasons why the U.S. economy is the envy of the world. That piece of institutional architecture separates successful countries from unsuccessful countries. It is extremely important, not for the people who work at the Fed at any given time, but for the people that we serve, that the Fed remain able to conduct monetary policy in a way that doesn't get pulled into politics, trying to help or hurt any particular politician or political party. It's critical for the people that we serve. In terms of when I would leave, I will leave when I think it's appropriate to do so. Was that all your questions, or was that?
Well, I just have a follow-up, which is, what would you say to the criticism that by remaining on the board, you're actually taking a political act and denying
This is
President
exactly
Trump?
what he's doing. He's staying on the board so he can vote opposite and to Kevin Warsh, and he probably has a few people, Powell, that is, the acting Fed chair right now, probably has a few members in the Fed that he can sway their vote.
Trump, the majority of
Even he's about to say, no, I am not doing that, but we know that he is.
the board, which as president he would have if you left.
I don't see that at all. As I mentioned, I'm literally staying because of the actions that have been taken. I had long planned to be retiring, and the things that have happened in the last 3 months have
I can
think, left me
understand
no
him staying. Obviously, if you're going to jail for something you did as a Fed member, I would probably stay too until all legal, stuff was dropped. I don't have a problem with him staying at all.
choice but to stay until I see them through at least that long. In addition, I don't see how this will interfere. My intention is not to interfere. I was a governor for almost 6 years, and the tradition is at the Fed that governors who understand how difficult
They
the role
all
of chair
vote
is, and as a soon-to-be former chair, I do
policy.
understand how hard it is to get consensus with 19 strong-minded people. You work with the chair. You try to be heard, but also collaborate with the chair and try to support the chair when you can. When you can't, you can't. And I think that's the attitude that people generally take, and that's the attitude that I'll take.
Nick.
Okay, fair enough.
Chair Powell, if I could ask about the inflation outlook. In March, you described the standard practice of looking through energy shocks as conditional on inflation expectations.
For anybody wondering, every $10 barrel of oil price move will affect CPI by 0.2%. Every $10 move in oil is a 0.2 move in CPI year over year.
Anchored. Since that meeting, there has been very little progress reopening key energy trade corridors. Can you help us understand how the inflation outlook has changed in the intermeeting period, beginning with the prospects for tariff pass-through resolving on the timeline that you had outlined in March, before getting to the energy shock that is now on top?
So, I would look at it this way. For a long time, we've been working
Brent crude still
on
hovering
the
on highs.
hypothesis, really, that tariffs would lead to a one-time price increase and that would go away over time. In other words, that there would be no further change, so measured inflation wouldn't reflect that higher level going up more and more. And it's time for that to happen. We really do expect that to be happening in the next 2 quarters. So we'll be watching very carefully to see that what we've thought all along would happen. That's the kind of critical part of the forecast. We need to really see that. With energy, it's so hard to say. I mentioned, in sort of the textbook, you would look through an oil shock because they tend to be short-lived and they tend to revert.
Right.
And monetary policy works with long and variable lags, so
right.
you wouldn't necessarily react right away. I think that is all the more true given that we're several years above 2% inflation and that we're already looking through the tariff shock. So I think we're going to be very cautious about that. But the question about looking through energy really is not in front of us right now. It hasn't even peaked yet. And I think we'd want to see the backside of that and progress on tariffs before we even thought about reducing rates.
So if I could follow up, the statement today preserves language that has
The
taken on
statement
some...
of energy not peaking yet is subjective. He doesn't know that it's peaked. Neither do I. I mean, it doesn't look like it has. Obviously, you are heading higher this week. You are above levels that I thought it would hold at. It didn't. I thought it would roll over here. It did not do that. So it does obviously look like it wants to go higher. You've got people positioning in Brent crude on Twitter right now that have a 150 price target on oil. 150 in U.S. oil would be... It would be all-time highs.
Meaning, as it was socialized when the committee was actively lowering rates. Why is that easing bias still ripe, given how different the inflation outlook is now versus a meeting or two ago? And what more would have to happen for it to get evicted?
So that was, as you will recall, we had a discussion about that at the last meeting, and we talked about it in the press conference after the March meeting. We had the same today. We had quite a vigorous discussion about that very issue and the
US
guidance.
dollar
and
testing
still
the 200-day EMA.
And I would say that the number of people on the committee who either could support that language changing to a more neutral stance so that a hike is as likely as a cut. That number has increased over the intermeeting period, and it's easy to see why. I mean, it's a good question, right? You see, inflation has moved up over the interim a bit. Core inflation's 3.2 now, moving, albeit just a little bit, in the wrong direction. And we know that there will be
Purple line is the 200-day EMA.
Headline inflation coming out of the Gulf, and we don't know how much that will be. We're going to need to see. So it makes all the sense in the world that people would look at that and we'd have a vigorous discussion about that. You saw that 3 people dissented over the language. I think all of those people agreed with the rate decision. So the majority of the committee did not want to do that, and I didn't think we needed to do it at this meeting. It really was just a question of why do we need to do that now? You know, we have so much to learn. There's so much uncertainty about the path ahead. There doesn't need to be any rush to make that decision now, because you know what happens in the next 30, 60 days, even by the next meeting, could really change the picture around that language. So, you know, it's a much closer thing on the committee than it was in March, and you know that makes all the sense in the world, it seems to me.
Yeah, this
Claire.
oil spot highs is
Claire Jones,
126.
Financial Times. Just going back to this issue of the easing bias, we've now got oil approaching $120 a barrel when it comes to the benchmark.
I'm not sure she means
Brent
WTI
crude.
or Brent.
If it stays around those levels 6 weeks from now, what would be your best
Brent's
guess
at
as to whether the
110.
easing bias will still be in the statement?
Oil's at
Thank you.
103.
I wouldn't want to guess. You know, well, first of all, we're going to have new leadership in all likelihood by then, and new leadership's going to have a very important role to play in that. So I won't be standing here at this podium to answer your question. So I don't know. As I mentioned, that's all I can really say is that we had a great discussion about that today. It's gotten to be a better question in the interim period. We had the discussion. A majority are still on the page of not feeling the need to move to that level, and that's where I am. I get it, though. You know, at a certain point, you would move, and that conceivably could come as soon as the next meeting.
Thank you. Just to follow on, the new leadership also seemed rather lukewarm on press conferences and on the dot plots. What would your advice to him be on these communication tools?
So I'm not going to give him any advice through you today here, but I think communications generally is. I think every incoming chair takes a look at communications, and it's a very healthy thing. I mean, communications it's very complex, and you can always be looking at new things, and if that happens, it feels like it's going to happen. That's a completely appropriate thing.
Neil.
Hi, Chair Powell, Neil Irwin with Axios. Can you tell us if you've been in touch with incoming Chairman Warsh? To what extent is this a normal transition process versus all the things swirling around, something unusual, and what can we expect when he takes that podium in a few weeks?
I haven't seen him since seeing him at a dinner in January where I congratulated him and had a nice
They're
chat
probably
with him.
not friends,
Haven't
bro.
seen him. I don't know what a normal process is. You know, the last process was with Janet Yellen, with whom I had worked for 6 years, and so it was. We were sitting down the hall from each other, so it was a very different thing. I think
Right.
this is.
Yeah. Trump appointed him on his first term. Oh, I mean, Trump wanted him to cut interest rates a lot more aggressive when Trump came into the White House. Obviously, because Trump wanted to inflate the numbers of the stock market so that way he could do his policies and still say, yeah, but stock market's high. We all know why.
Will be a very normal, standard kind of a transition process.
But Trump
so
no longer
that's what I
likes
expect.
him,
I have every reason to
so-
think it will be.
Quick follow-up, is the Supreme Court ruling on Governor Cook a factor in when you may leave as a governor?
I wasn't thinking of it as such, but no, not really. I mean, I'm thinking more of the other things I mentioned.
Chris.
Yeah, he doesn't. I agree.
Hi,
I think
thanks
it's
for
a dick
taking our
move
question.
to threaten legal
I
action.
wanted to ask a question
Criminal
about your tenure,
action.
and Chris Rugaber at Associated Press. During your tenure as chair, you often spoke about how disadvantaged Americans benefited from extended periods of low unemployment. In the new framework the Fed adopted in 2020, some economists say elevated the Fed's employment mandate. Are you worried that the pandemic inflation spike that followed will make future Fed chairs more reluctant to pursue a hot jobs market? And should they be?
I don't know the answer to that. I mean, what we experienced in the teens, the mid-teens, was really low levels of unemployment for a long period of time and no reaction from inflation. And we all very much took notice of that. We also noticed that.
I think he's referring to he said mid-teens, but it was like 2017, if I remember correctly, when the Fed became extremely hawkish and ended up causing the S&P 500 to roll over. The last day or that low, actually, from that little down spike happened on Christmas Eve. Then they backpedaled aggressively on rate hikes. They actually started cutting rates.
That the biggest wage gains were going to people at the bottom end of the income spectrum. And we had many, many reports of, it felt like a fairly stable equilibrium, and a lot of benefits were flowing to people at the bottom end of the income spectrum, including companies were, setting
They've
up.
kept policy very restrictive
people
for a
were
long time.
Confined. And like training them before they got out, and it was a very healthy sort of set of societal dynamics. So of course, I think anybody would love to get back to that. I don't think that anything that happened to create the global pandemic inflation was in any way related to overweighting the employment market. I mean, it was a global shock that happened essentially very, very similarly all over the world that had to do with closing, reopening, stimulus and all that. And I mean, you could look at a graph of 10 big economies on the page and not know which was the U.S. and which was Germany, France, and things like that. So I don't think.
So the last time the Fed was as restrictive as they are now was back in 06
we experienced
through 07.
I think it's always
right
been a balance.
Before the GFC. They were this restrictive for as long.
You've got to be.
But as you can see with the Fed funds rate, they are usually all over the place.
For example, now we don't feel that the
usually all over the place.
It's
been more stable for the last.
About that. It's been a long time since we
almost
had to worry
30
about
years.
That. Well, actually, during the pandemic recovery, the labor market was super overheated and tight, and that's when we had to worry about it. But not now.
Just on the other issue. Do you need more assurance from the Justice Department before stepping down? Is that what you're waiting for, or
all the assurance?
I'm waiting, for the investigation to be well and truly over with finality and transparency. And
every business is asking the same question: how do we make AI work for us? Garbage. No more waiting with NetSuite.
Michael McKee.
Michael McKee from Bloomberg Television and Radio. I'd like to ask you if you could explain a little more or characterize a little more the discussion about the two-sided view and interest rates, because there were some members of the Open Market Committee who've been suggesting that we may need to raise interest rates even absent the war because inflation was not coming down fast enough.
The market was pricing in rate cuts for like a day, or rate hikes, for 1 day. So, no, I mean, I haven't heard any Fed members say we need to do rate hikes. None. Not sure what he's talking about.
Is there any sense that interest rates might have to go up, or was this a setup to sort of warn people?
Raising interest rates is literally their only tool that they have to combat inflation. That is it. Lowering interest rates is their only tool to fight high job loss. So that's it. That's their only tool. Rising and lowering interest rates to combat high inflation and job stability.
You're worried about the
jobs are stable right now. So to hike interest rates right now, inflation is low. That creates a very sticky situation.
War impacts.
So nobody, the three dissenters and others who could have supported that.
We are already in restrictive territory. We've been in restrictive territory for a while. That restriction has been eased, obviously, but they were restricted for a long time. I think, markets may have been even hotter had they been less restrictive or quicker to lower that restriction.
And others who were voters and non-voters who preferred it, they all supported the right decision, right? So people are not saying we need to hike now. It's more a question of,
that's what I thought.
Don't we
I don't
kind
know
of
what he's
feel
talking about.
that we should be neutral? And what are markets doing? People argue that this is consistent with markets are doing. And again, it's a very fair question, but these changes, it's a form of forward guidance, and you don't want to make them.
Bitcoin is bouncing
in a way
now
that will be sustained and
slightly.
continue to make sense, and not something you need to take
Nothing
back.
major, but it hasn't made any fresh
fairly quickly.
lows.
So I think we just a group of us.
There's a good chance your low day is in
a hurry
Bitcoin.
on that.
Will it
that
continue
markets
to
are not
be the low
confused
day?
about our reaction function. We don't have a
I
problem
doubt
to
it.
solve on that. But the other side of the argument is a good
Dollar is
argument
pulling
too,
back off
as
to
I mentioned.
200
It's a perfectly
slightly.
good argument
Oil's
to be
still
having, good
pushing,
discussion to be having. So,
but looks like
and
it
came
may
out
have
the way it
topped out
came.
for the day.
Well, you've got 3 dissents in favor of two-sided warning. You've got yourself staying on the board. You've got the criticism that does come from elected officials, and you've got a lot of critics who have faulted the Fed for being too slow 2021 with inflation. Are you worried about Fed credibility under all of this? Is that one reason that you want to stay on?
What kind of a question is that, dude?
Not driving my thinking now. I mean,
Nobody
monetary
thinks
policy is going to get made by, 19 people. There's a lot of stability there. I mean, if you think about it, every new Fed chair has the same situation, which is you've got 18 colleagues on the FOMC, 11 of them vote during any year, and your job is to create consensus. It's to talk to them, understand them, be inside their thinking, and be able to pull them together and get consensus and move. And that's what every Fed chair has to do. And I think Kevin Warsh is actually quite well. He has the capabilities, skills
he used to be a Fed
very
governor
good
too,
at that. I would think. So I think I'm not so worried about that process. I think that'll work itself out.
Howard.
Thank you, Chair Powell. Howard Schneider with Reuters. You mentioned that staying on as a governor, you intend to keep a low profile. I'm just wondering if you could give us a little more detail on what that looks like and how you can. Touche. Walk down the steps. What that looks like, and particularly around the policy discussion, how you're able to have your intervention and not be a shadow chair and not have a kind of an outsized influence over the process.
Yeah, that's just something I would never do. The shadow chair thing. No, I don't know what the exact specifics of it will be, but I'm going back to being a governor. I respect the role of chair. I was a chair. I was a governor for 6 years, and I know what that's like. I know it, and I had a.
So does him going back down to Fed governor, does that mean that somebody's going to lose their job as a Fed governor because he wants to stay on until the investigation is over? That's kind of a dick move, isn't it? I get it that he's the old Fed chair and, he wants to keep a job. But if he's only doing it because of the investigation, he's going to potentially take somebody else's job.
Pretty front row seat particularly with Chair Yellen, to whom I was close when I worked with Chairman Bernanke for 2 years, but I was brand new at that time, so I got a sense of what it was, and I had real sympathy for how hard it is to get that group to consensus. And I always felt like I don't want to add to that unnecessarily, and that means try to support the chairs where the direction the chair wants to go in, if you can. If you can't, you can't. And I think that's the way it's always worked there, because the chair only has one vote, plus the ability to develop consensus. And if people won't be, they won't, if they're not flexible at all, then how do you ever do that? And so that's why the authority the chair has really is to develop relationships with people and work with them, and then put something forward that has consensus. And I propose to be a very constructive participant in that process, really out of respect for the office of the chair.
And in your view as a soon-to-be governor, how do you see the risks of oil prices bleeding into core inflation in coming weeks? Because it seems like the commentary that was coming from particularly some of the Reserve Bank presidents, they were elevated concerns about the bleed into core. And, here we are with 3 dissents now. What do you see as the prospect of a core inflation?
Those prospects are real. Remember, though, and they're real, and the real thing is we're going to have to wait and see. we're going to need to see. And the good news is we think our policy stance is in a very good place for us to wait and see. We're right kind of at the high end of neutral or perhaps mildly restrictive. The labor market shows more and more signs of stability, whereas inflation is kind of misbehaving. And so maybe a little bit of restriction or the high end of neutral is just the right place to be. So we can wait here and see how things work out before we act. And we'll see how much that, how much does come through into core. You see it already in airfares, of course, but you may see it in many other places.
Anybody, it's going to be hard to get anybody. Even if Kevin is a Trump guy, it's going to be hard to get him to do anything while the Strait of Hormuz is locked up like it is. I mean, if Donald Trump, he needs to figure out something if he wants to keep the markets moving in the right direction and keep inflation staying down.
We just don't know yet, and it's so unknowable because how long will the strait be closed? You can develop any number of scenarios that you want, but we really won't know till we know. So fortunately, we're in a good place to wait and let things develop.
Still slightly restrictive is a good place to be right here.
Thanks, Mr. Chairman. You started holding post-meeting press conferences for every meeting as opposed to the ones with with SEPs. Can you talk about why you see that as a net positive?
So we always said when we were doing quarterly press conferences, we always said we can move at any meeting, but we only ever moved at the quarterly SEP meetings where we had the press conference. So if you think about it, during the pandemic, we were moving.
It's just when they released dot plots and that stuff is what he's talking about. That's why today there was like almost 100% chance they weren't going to move. This is not a quarterly meeting.
Like a lot at every meeting and sometimes between meetings. And doing that without a press conference, I think, would have been quite challenging. It's become the industry norm. It's the standard. I don't know whether that has to remain that way. I don't know. I mean, it's just something people have become used to. And I do think it's quite helpful I try to deliver a message on behalf of the committee rather than 18.
It gives the market a sense of stability, and it gives the market clarity. Like the market knows, people in the market know that they only release when they are only going to move the rate on the quarterly reports. It's just for the market.
18 other people going out and delivering their message, and it's going to be all over the place because we do thankfully have widely disparate views.
Okay, thanks. The other thing I wanted to ask about was the communications review from last year. Could you describe the debate last year, what changes were considered, what you wanted, and what prevented action, any action on those changes?
So I'm not going to go into the real small specifics, but what we found very quickly was
Bradley says he only gets rattled with high oil. High oil is rattling. It definitely affects inflation for sure.
Making changes, making really large changes, for example, to the dot plot or the SEP.
And Bradley also said, watch Powell leave a hawkish turd as a parting gift. Kind of did.
It didn't have. We couldn't come up with anything that had really broad support on the committee, and so we just moved on. We didn't really do as much on that as we might have. And I was never the world's biggest fan of the dot plot, but you can't beat something with nothing. And there's
Bitcoin is putting in a bearish engulfing day. It actually put in a bearish engulfing day the other day. So if you're looking for candlesticks to confirm topping formations, you do have a bearish engulfing day right there on Monday, April the 27th. And that was a lower high coming in from the original liquidation move. Because if you remember, that Monday was the first time since February's low was put in that prices was able to get back to February's high. Bitcoin has essentially been trading in this range, if you will, since this day right here. So since Tuesday, April the 14th, right? I mean, it's a little higher, but not much. Not much. So in a sense, literally all of this price action right here is just one gigantic conglomeration of a range. Not much has happened in the later parts of April with Bitcoin. I would argue that not much still has happened. It is a bearish engulfing, and it does suck that it is pulling off of the highs. I would argue as long as your April VWAP is okay or below price, the trend still looks strong. Also, we're getting very, very close with 1 day and 5 hours left on April's range. This would look much better, I agree, closing above February's high. It would look much better. Falling at February's high, dropping back into March's range does smell like weakness. However, you are potentially closing above the midpoint of the monthly range, which indicates the closing price in April is strong. Okay? Now, does that mean when May opens that you won't see a bearish engulfing candle and a fresh yearly low? No, of course that does not mean that. However, it isn't extremely weak right here. At least it's a good close, but that's if it was closing today. It isn't. It closes tomorrow. Tomorrow will be the close. So if we see downside continuation tomorrow from this, then it will start to look bad. Then that VWAP will come back into effect. And if it closes under the midpoint, that'll look nasty. That'll look like a reversal, like a rejection. Like I said, it would be not good going into May, because there's that old cliche, sell in May, go away. So obviously, all of your Uber bears on the Finternet right now, YouTube, I don't have a Facebook or Instagram. I just basically focus on YouTube and Twitter or X. All of those people that are bearish right now today, they're going to be bearish in May. It's a guaranteed fact.
We've looked at a bunch of things, and it's something.
But yeah, we do have a bearish engulfing today.
Every new
we had
chair
one
is going
Monday
to look
too.
at our suite of communications and think about what would be changes. We are the only major central bank that doesn't publish a forecast, and that's because we have a 19-person committee, and you try to do that at the board. That's hard. At the committee, that's hard.
I don't specifically know what forecast he's talking about publishing, but they do publish a dot plot matrix, which kind of is forecasting. It forecasts ahead almost a year and a half, 2 years. So I'm not quite sure what he's talking about there.
Staff, so it works. I think our communications are fine, but looking at doing it in a different and better way is the most natural thing in the world.
Obviously, he hasn't said anything that the markets hate yet, but it should be getting close to being over. Thank you for the commercial, YouTube. We love them. It's just their way to try to get everybody over on premium to get away from the commercials. I literally despise them.
Despite this major energy shock, the unemployment rate has ticked lower. Inflation was moving sideways even before the war, and is now moving higher. So where is the committee at on that debate?
Where we're at is we think our policy rate is in a good place. If we need to hike, we will certainly signal that, and we will certainly do it. And if we need to cut, then if it's appropriate to cut, then we'll signal the opposite. I think because we feel like we're in a good place to move in either direction. Nobody's calling for a hike right now.
Nope.
So it really is going to depend on how things evolve, and that's really where it is.
They're data dependent. They've always been. They always will be.
Much closer question this cycle
like
on
traders.
Changing the guidance, but ultimately we didn't.
Only now they're not allowed to trade.
As it relates to the war, at what point do you think the risk to growth will be larger than the risk to inflation as this conflict drags on?
You just have to find that out empirically. Given our the fact that we're a big exporter of energy, and that our economy is far less energy intensive, oil intensive than it was during the 70s. The effects on the United States are really substantially less than those
they're
of
minimal.
Western Europe or Asia.
Because we can drill, baby, drill if we have
from
to.
These
we have
things.
a lot of oil.
The effects we're feeling in the current situation currently, and in sort of what's priced in, which is a relatively quick outcome. If this goes on for much longer and prices go much higher, then we'll feel that much more. And of course, I'm talking about aggregate inflation numbers. We're very well aware that people are experiencing higher gas prices all over the country now, and that hurts. Those hikes may continue to happen, and other things are going to start to.
This is what gets me when he says that the FOMC is literally for the little man. It is not really, because if you think about it, every time there has been inflation spikes, goods always go up. Then the Fed adjusts the interest rate policy to bring inflation down, and then in CPI and PCE both come down. However, goods stay at that high inflated price. They never go down. And this is because they devalue the dollar over time.
Reflect airline fares I mentioned and other products and services that are dependent upon petroleum and derivatives of petroleum.
The
People are going to
CPI
start
number
to feel
has
that.
no value on goods. We the people.
Thank you, Chair Powell. Edward Lawrence with Fox Business. So I guess I'll just ask you directly on this. The markets don't see a rate cut at all this year, is what they're predicting. Do you think that we are at the neutral rate? Why or why not?
The neutral rate is we cannot know it with certainty. I think pretty close to the neutral rate. Yeah, I always had it between 3% and 4%. We're a little north of 3.5%, so that's well in the range of what I would consider a reasonable, but at the higher end of the range of what I would consider
it's still a little bit restrictive.
I think the labor market is still probably cooling off just a little bit, and I don't think there's much of a case for any case really for policy looking meaningfully restrictive, maybe mildly restrictive or neutral, I would say.
And I want to follow up on.
But it's still more hawkish than it is dovish.
About your future a little bit. The first time we've seen 4 dissents now since October of 1992. Are you handing off a divided Fed?
The thing to remember is we have always had vigorous debates, and they're excellent debates. I have to say they've been really good, and we're in an unusual.
It is probably divided. When Democrats are in office, they try to put Democratic people in the Fed. When Republicans are in office, same thing. And Democrats and Republicans are always divided. It seems like when the Republicans move to the left, the Democrats move further left.
Usually difficult situation.
So obviously Republicans and Democrats are never going to agree on anything, and it's only getting worse because of how far left the Democratic Party has went. My father is a Democrat, and he hasn't voted in years, but his policies reflect that of more of a moderate Republican than they do the Democratic Party right now.
So we've really had 4 supply shocks.
And he's a
actually,
Democrat.
you can say more than 4, but
that's the way I think a lot of the older boomers is they are Democrats, but they don't see how wildly left their political party has gotten. Like, they don't believe that there's members in Congress on the Democratic side of the ball that are literally frauding the American people, which there are. Like, we know for a fact that there are, right? We know there are people frauding the U.S. taxpayer that are in Congress right now.
Minimum, we had the pandemic, we had the invasion of
sides.
Ukraine, we had tariffs, and now we have Iran.
It's just
and
a label. They're all elites.
The oil spike. So every supply shock has the capability of driving inflation up and unemployment up. And
it's always
what do? It's the central bank has a really hard time
moving
knowing what to do.
Slightly higher.
The right thing to do is to try to balance.
So it hasn't made a fresh low.
And that's what our framework calls for us to do. But these are really tough difficult judgments. You've got to have a
It's
forecast
been
for each
slowly
variable.
heading
You've got to
higher.
think
Same
how long
with
it's
the
going to take to
S&P.
get back to target. You got to think
Well, the
how
S&P made a
restrictive
lower
or
low,
not is policy. So
245.
it's only natural that you have a range
But
of views
slightly
on the committee.
bouncing.
You know, people are going to see
S&P's
it
damn
different
near
ways. They're
at
going to
the
have
high
different
deck.
risk tolerances and that kind of thing. I mean, if
S&P is
everybody
just a
agreed,
mild
that would
pullback.
that would be surprising, and
That's good.
I think it's only
Even
it's
with
partly
oil
a function
moving
of
up,
the
the
extraordinarily
S&P
challenging
500 is not wrecked.
set of supply shocks that we've been dealing with now for 5-6 years.
Why is that? That's because a lot of big market participants
Thank
are
you so
bullish
much, Chair
right
Powell.
now.
Selena Wayne with ABC News. Are you confident that Kevin Warsh will stand up to political pressure from President Trump?
So he testified very strongly to that effect in his hearing, and I'll take him at his word.
And when it comes to gas, right now it's over $4 a gallon. Inflation just hit a 2-year high. Should Americans...
Is gas $4 a gallon? I barely drive where I live so close to everything. The last time I always put 92 octane in my fuel tank, and the last time I put gas in it was $3.50 a gallon. And I'm in Southeast Florida, right on the beach. It's been a couple weeks though since I've had to fill up.
expect to be paying
I'll take a
higher
look
gas
today.
prices for the rest of this year? And in your view, does that take a rate cut off of the table? And secondly, by staying on as Fed governor, what message do you think you're sending to the president?
I don't know what gas prices are going to do for
Everything
the rest
I
of the
need
year.
is within 2
And,
miles of where I live.
It will depend on how
Everything.
long the strait remains closed and how quickly it can be reopened and that kind of thing. But remember, when gas prices go up, that's disposable income coming out of people's pockets, so they're going to spend less on other things. So there will be a hit to GDP. So it's a question whether spending goes down to offset the inflationary effects. So
ISM
it's not-
numbers
the
got
answer
above
isn't
50.
obvious ex ante whether you should move your rate over because of that. We'll have to see
It
how it
hasn't
evolves.
affected it yet.
Message it sends to President Trump by staying on?
I'll stand on what I said earlier.
When they drop the criminal stuff right against him, he will leave. I almost guarantee it.
Hi, Victoria Guido with Politico.
And
During
he's
your
standing
tenure,
on that,
Fed independence
so
has come under pressure in
he's
a
10
lot of
toes
different
in.
ways. And I was just wondering, practically speaking, where do you see Fed independence as coming from? Is it the law? Is it political support from Congress? Is it the actions of the Fed? What sustains Fed independence?
Well, it's to a significant extent, it is the law, and we've had to go to court to successfully so far to defend it. But the law does create a setting in which the Fed can and is directed to make monetary policy without consideration of political factors. And so part of it is the law. But it goes beyond that, though. There's a set of customs. There's a boundary line between the Fed and the administration, between the Fed and the Treasury Department. And we need to continue to respect those boundaries about what the Fed is responsible for and what the Treasury is responsible for and what the rest of the administration is responsible for. So some of it is legal. In fact, it's all legal at the end of the day, but it's more than just monetary policy. We don't want to use our tools we haven't wanted to use our tools to achieve goals that are really clearly outside our mandate. Every administration looks at our tools and thinks that would be good to repurpose those to serve other purposes, but that's dragging us into politics and into fiscal policy. So we've resisted that.
Well, and maybe another way of asking it, too, is do you think that Fed independence is as strong now as when you became chair? And if so, why?
He literally just answered that question.
Look, I think it's at risk. I mean, I think these legal assaults, if you will, as I mentioned, the institution is being battered over these things. We're having to resort to, the courts to.
But I mean, in Donald Trump's defense, which I very rarely do, because that man is off the cuff sometimes. You spent close to $6 billion with a B, bro, to build a building for you to work in. That's $600 Or no, like that is 6. You could have done that easily with $1 billion, maybe half $1 billion, right? $4 to $6 billion you directly spent on luxury
to enforce our legal, it's not so much independence. It's really the ability to do monetary to make monetary policy without political considerations. That's what we're talking about, and we've had to do that, and we've been successful so far. But that's not over. None of that is concluded yet, and it's really important. It's not about people who work at the Fed or the institutions. It's about the benefits of a central bank that makes decisions based on analysis and our best thinking, rather than trying to help or hurt politicians. It's that there's a bright line between central banks who do one and do the other, and successful countries have uniformly, successful advanced economy countries have a really strong set of protections around their central bank just for that reason. So that's what it's all about. I think I am confident, as I said in my remarks, that the Fed will continue to make its decision based on analysis, rigorous analysis, and not on political considerations. But we've had to fight for it.
So Vodka says that you have rate hikes and cuts, but they are not effective without balance sheet expansion or contraction for liquidity. To what ends are you referring? Their mandate is to control inflation by raising interest rates and to control job losses. So like if you have massive spikes in unemployment, they essentially make money cheaper, right, to basically help business hire. That's it. That's their only tools. This whole buying a U.S. Treasury thing, that was done. It was done in 2008 to keep the country afloat, right? And now, because they injected heroin into the patient, they have to keep doing it. They don't want to wean the patient off. And to be fair to the Fed, I would not have tried to do that during the pandemic or when inflation was running to 9%. Obviously, they needed to do something then too, right? But at some point, the Fed does need to wean this system off of that because it looks bad long term. But as Steve Eisman said, the BOJ has been doing this for years and they're doing just fine. Their currency's not doing great, but I mean, people are still buying goods and services. So I guess I could agree with you. Yeah. That isn't what they used to do back before the financial collapse.
I like to think that, I like to think we can get out of that.
Before the GFC, the Fed they weren't allowed to do what they do now, right? You didn't find out if the Fed was going to hike or cut until the Fed did their announcements, until they had a press conference. Nowadays, they kind of guide the markets by leaking their intent. You know what I mean? But the market participants used to make bets. He's just basically in full on
era and go back to respecting
here. Not hawk mode, defending his own. Like I said, it's a dick move what Trump did. But I mean, this kind of information is irrelevant to markets right now.
And what custom has been, which is to, let the Fed do our thing. It's an institution full of human beings who work super hard to get things right for the benefit of the public. We're all human. Don't expect for perfection.
Here's the
but
press
do expect us to make
things,
decisions
right?
without political considerations and the very best analysis we can bring.
Ask questions that have to do with monetary policy.
Katerina Saraiva, Bloomberg News. how would you characterize what you've heard from your colleagues on your decision to stay? Do you have their support? And then have you heard concern from your colleagues about continued legal attacks from the executive branch? Is this something
nothing
that
to do
others have
with monetary policy.
talked to you about?
So
Nothing.
I think that I don't want to report on what my colleagues think. They can speak for themselves. But there are widespread concerns that these things may continue. That's all I'll say. And and that would be a problem.
You opened the door by answering any of their questions that lean this direction.
And then I just also wanted to ask about Governor Waller's speech on the reserve banks. Do you have any thoughts on centralizing some of those functions in the way he described? And then are you concerned that something like that could potentially be a slippery slope to consolidate reserve bank functions even more in such a way where the central bank ultimately loses some of that important regional information?
So we try to be good stewards of the public's money and efficient, and Chris Waller is particularly passionate about that. Of course, so are the presidents, and it's a question of how do you accomplish it. We of course, and Chris said this in his speech, we want 12 strong independent central banks with their own staffs and their own monetary policy views and all that. But there are things that are done in all 12 which could well be done at one much more efficiently and with cost savings. And so there's a back and forth going on that, but everybody's on the same page.
How to find the right car for you. Go to cars.com. Look at the car you like.
This is ridiculous.
Ciao. Find your next possibility on cars.com.
I think I might have just found the future of wallets. Code 118 Wallets just launched some new colors, and it makes my old
of the Fed's ability to make monetary policy independently. If every administration could come in and do that,
now Bitcoin's
you're
starting to
just
find a
another
little bit of
cabinet
a
agency
near
at that point. So that's not something that I would support. Chris said the same thing.
Christine.
So, see how Sailor's cost basis is acting
Thanks,
as
Chair Powell.
resistance
Christine
right
Romans,
here?
NBC News. I want to
Let me
ask about
pause her
legacy.
because
When the history
legacy,
books are...
Nobody cares about legacy. Oh, Strategy's cost basis coming in as resistance here. This isn't great. I don't love that. Yeah, this isn't great. I don't love that. I want to see Bitcoin able to maintain this. It still could hold support here today, but I haven't heard the Fed say anything that could sway the markets in any direction. Essentially, the Fed meeting today was a non-event. I mean, the markets were already selling off because of what Donald Trump said this morning. Donald Trump is the kind of president that the markets could do one thing this day and do a complete different thing the next day. So we were just kind of wanting to see, hey, thanks for your service. Have a good day, Mr. Powell. And he's done that. So pretty much done with him. But keep an eye on Strategy's cost basis moving forward, especially for you day traders out there. I mean, it's obviously acting as a near-term resistance right here. I wouldn't be opening fresh shorts today after Bitcoin has ran down 1% or almost 2 at this point. Well, it's less than 1.5, so it's not that bad. It isn't that bad. But if you're looking for bearish entries, maybe here in the morning or something like that could be something to watch. I don't think you're going to see a massive down move today, but it is important to keep an eye on oil. It is literally rocking and rolling here. So you could see a much further move lower. I just don't know that I'd be opening any fresh shorts right here, right now. Obviously, the best trade on the day was to get Bitcoin up on near the day highs. Like that's where you're going to be watching. And this is why we do technical analysis, because we are essentially looking for entries, and the best places to look for those entries are going to be in and around highs and lows, no matter if you're a buyer or a seller. It's always going to be the case. It always is the case. So you are currently trending lower here under yesterday's low. So the majority, because it's a bearish engulfing, means that at one point today you were testing yesterday's high. That would have been a really good place to mitigate risk. You had a daily supply candle that was built in here just shy of the February high. That is the monthly area to mitigate risk. So anybody that's holding shorts now at February's high, those positions are safe as long as Bitcoin is trading in the opposite direction to that high. So these are always going to be your best areas to look to put on risk. You do have a bearish engulfing, so shorting at the daily low right now would not be the best trade to make. It's obviously not the best trade to make to buy it either. Not with oil ripping to fresh day highs. At some point, oil will most likely roll over, but it will take a ceasefire or a deal in the Middle East. Until that happens, you've got clear signal that it wanted to go higher. It went higher. It's breaking out. It's moving higher. So don't be trying to short this violent move. You're going to get ran over most likely. But if you are watching it, just keep an eye on it. If you start to see an aggressive move lower, if there's some kind of news driving it, maybe you could jump on a short then. But just looking for liquidations, you're well above everything that matters. You're so far above everything. Right here is yesterday's high. So forget about the white lines that I have up there. Right here is yesterday's high. Like that, or just a little bit above it, would have been where we would have anticipated a short on oil today. When you're looking at the intraday chart, you can see how low that is on the daily range. That's way down here. When you broke out here, you put in 3 trending 30-minute candles. Boom, boom, boom. Higher highs, higher closes. And then 4 sideways. 5. 1, 2, 3, 4, 5 candles sideways. And it's going up. This is a bull flag. Right? That's a bull flag. Those are not patterns to short. Here's another bull flag. This is an expansion candle, a fresh high. Expansion. All of these candles are inside this candle's range. This thing is currently trending to the upside. Trying to short that is going against the market. And if you are probably the cause of this thing continuing to go higher. Pingu was the one I liked the best for the short today, because when we got close to the bell or the market open, the New York session, we had heavy bearish deltas here. Like you were way down under the neutral line, and price had topped out. So when it traded back up, that's where the short trade was the best trade to take. It's lower than the prior day's high. It's still more bullish. I tried to short this the other day, got stopped out of it. Getting short too early. Now you're starting to see a little bit of topping action, but we're at an area where buyers could show up at any time. This asset was a little bit more extended in terms of where it's trading compared to February's high. Right? Well extended above that. But in terms of daily 200 exponential moving average, it's about the same as Bitcoin. As Bitcoin fell short under its 200-day exponential moving average. I did a video on Saturday alerting everybody to all the major resistance levels and to where the major support levels should be, or at least where we want to see them be, right? As of right now, today, it's the 21. So if Bitcoin holds support here at the 21-day, it might not be today. It might be tomorrow's candle. Tomorrow's candle is going to open tonight at 8 p.m. Eastern Standard Time. If you're in the East Coast of America, when you get that move, if Asia sells it off and you get under today's low, if it continues to make lower lows beyond that point, then you do not necessarily want to be a buyer. It's how far are you under this low? If you're just barely under it and basing, maybe you could be a buyer there, as that would be the 21 test. Maybe the open. Where is the open at for tomorrow's candle? Is it above the daily 21? Is it below the daily 21? All of this will be very important data going into tomorrow's New York session. So you are testing a potential area of support. Is this a nasty down candle today? I would argue no. It's getting close to when we saw nasty corrections back over earlier. It doesn't look anything like any of these behemoths, but that's okay because volatility is lower. Volatility's trading, or the VIX is trading at 1849 right now. But even here, you can see that this was a nasty down day after a rejection. We don't have anything like that transpiring here. So for me, this is just a correction. This is just an intra-month, or shall I say late month correction. Friday will be or Thursday night will be the month open. So tomorrow night will be the month open, but Friday's New York session will be the first day of the month, like real New York trade. So, I mean, Bitcoin could ultimately put in support here. We'll see if it does or not. I don't want it to stay trading under Strategy's cost basis. As long as Bitcoin is trading under Strategy's cost basis, that means the Sailor squeeze is still on. And the Sailor squeeze could, in effect, put downside pressure on Bitcoin. As Sailor does, he does own more Bitcoin, or that the company does more than anybody. Almost, right? He's getting close to being the biggest Bitcoin holder. So obviously, as long as Bitcoin is trading under his cost basis, that's putting pressure on it. I don't think that you're going to see fresh bear market lows. It is possible. It is possible. Just mitigate your risks. Make sure that your risks are mitigated. Make sure you know what you stand to lose if Bitcoin were to break out and start ripping, and make sure you understand what you stand to lose if Bitcoin continues to break down. I would love to see Bitcoin spend hours in this area, as that would feel better than if it just continues to free fall from here. So I will be interested to see what happens during Asia. But I mean, really and truly, the only resistance that we have for the dollar is the 200-day exponential. So it could ultimately still be a sell. With this gap overhead, it makes it a little bit more of a risky short. Like I said, if you look at other exchanges like Capital.com, for instance, that gap up that occurred on Monday or Sunday night didn't happen on this for whatever reason. But I looked at Euro on Forex.com and other markets, and the Euro did sell off aggressively on the open on Monday. So that move on the DXY was a real move from what I can tell. So you have already filled half of that original gap. So to me, I will have a bearish bias on the DXY as long as you're trading under the April open. I think if you're trading above the gap and above the April open, then you can go ahead and say, yeah, the bulls have got it. The bulls have got it. It's going higher. When the BOJ intervenes, then potentially we can look for the dollar to go lower. So long term, Bitcoin could trade in this range for much longer. Let's go over here to a cleaner chart so you can see that range. This is that range. All right, we can go look at the actual, where is that at? Right here. So first we want to look at open interest by expiration, as we did clear off a lot of those call and puts from last Friday. Those are gone. The next major area or date, it's not a price area, it's a date, is all the way out to June the 26th. So as you can see, new options are being put on. As of right now, they're a little bit more skewed to the bearish side. Makes sense. Let's go look at options open interest by, not this one, sorry, by strike. So there you go. I would say a lot of this is call selling. Call selling is taking place at 80K. Call selling is a form of resistance. And then obviously there's your 60K put wall. So that's the range from 60K to 80K. That's the range currently that Bitcoin is stuck in. So looking at this chart, getting rid of these two lines, just looking at the put wall and the call wall, you can see that getting long here on Bitcoin may not be the best area to get long, right? There might be a better price to get long Bitcoin. So that could also be why we're seeing Bitcoin pull back here. I mean, I started buying at 67 because that to me was about midpoint of this range at that point in time. But that was prior to this leg higher here. That was prior to that. I was buying it when Bitcoin was down in here because at that point in time, the range was smaller or tighter, I dare say. There's the low. This is the high. So that would have been roughly around the midpoint. And this right here, because price set the low, then traded sideways, moved up, set that high, then traded up again. This is the range. This is value. This is where price has value. So now that value area has gotten larger. So basically what I'm trying to say, to make a long story short, is I would love to see 70K hold as support moving forward. As now that would be a better area of value. So buying up here is risky, is what I'm trying to say. If you're looking to be a buyer tomorrow, then you're buying anticipating a breakout is coming this week, right? It is possible. If you are a scalper, which most of the people that follow me are, then that's what we will be focused on. We want to see, does Bitcoin hold support in this area? Is a breakout coming soon? But in order for that breakout to come soon, I think you would need to see oil and the dollar roll over, or at least top out. Quit making fresh highs. So right now it does feel like the bears are kind of in control of price here. So if you haven't put on a short yet for mitigating risk on your long-term long cold storage portfolio, you're still close enough to where you could probably do something like that if you want to protect yourself from any further downside. I honestly do not think some kind of massive collapse is coming on Bitcoin. I know there are a lot more larger accounts out there that think that this is just another selling opportunity, but when the premiums are stacked this much against the shorts, you have to realize something. That is putting a potential breakout more in the realm of possibility, because not only have the sellers been wrong all of April, but they're also paying twice for that trade because of the funding rate and because of the premiums that they're paying to buy puts. There's a massive premium. So if you basically the way to see the premium is to look equidistant away from the call to where the put is. So if you're looking at the money prices, go look at, say, 5 strikes out of the money on Bitcoin on the call side, look 5 strikes out of the money on the put side, and you'll see that premium. They're paying a big premium right now to be bearish. We generally see that when there's a lot of buying pressure in the market. If we go look at, we know where the resistance is. If we look at the long-term holder supply, you're going to see this indicator spiking. Now, a lot of people are not, they're not worried about this, and I get it because of the way that this indicator works. Anybody who buys, so basically anybody, if you bought the all-time high, at this point in time, you're still holding those coins, you are a long-term holder. So that's why this indicator is spiking. I wanted to see the indicator spike. Obviously, I wanted to see it quit rolling over, and it did. It did go on and make another low, but that's fine. I wanted to see it quit. This told me that, the longer-term guys have sold. The majority of them have sold. And that's a good thing. Now the indicator is making anybody who bought after the all-time high as long-term holders, because Bitcoin has not been going much lower. If it does break down, this will head back lower again, because these long-term buyers, I don't know exactly where 155 days is, but I do know that right here, if you bought anywhere in this time, you're a long-term holder now. And that's why this indicator is spiking aggressively, but also people are buying. You can bet your bottom dollar that people are accumulating Bitcoins in this range. As this range has gone on long enough now to where it's starting to feel less like we're going to see a much larger down move. But obviously oil and the dollar is still putting that pressure on Bitcoin. The longer that oil stays elevated like this, the more pressure that can put on risk assets. So things aren't looking great here, but they still are not looking terrible either. Long-term Bitcoin looks okay. So back here, the 2022 bear market, you put in a similar multi-month range like this, and then you did end up going lower. But in terms of where you were in the cycle, we're in totally different places. I'm not talking about the 4-year cycle. I'm talking about momentum's cycle. The momentum oscillator has already bottomed out. You already did hit oversold. This indicator has 100% of the time correctly sniffed out Bitcoin lows. 100% of the time. I don't know if this is all-time price data. It looks like it is. But you can see that anytime you hit these levels, that has been a good area to start being a buyer. And that's all I've been saying this whole time. Whether or not we're in the same period as we were back in 2020, right into here, this is not where we are now, right? April 2022 was here. The indicator had not gotten oversold yet when you were in April. This April, you have already been oversold. I'm just saying, price went a lot further in momentum and in time. It went further quicker. And I think, a lot of people out there are not understanding that, or just ignoring that aspect. So to be able to say that this cycle is no different than any other bear market cycle in Bitcoin's history is wrong. Because in every other Bitcoin bear market referring to 4-year cycles, you never even came close to hitting oversold by this time yet. Because in 2021, you topped out in November, early in November. Then price rolled over April 2022. So same scenario. So this sell-off was far less aggressive than this sell-off was. This sell-off, way less aggressive. This sell-off was a very aggressive, very fast moving cycle. So we could spend a lot more time in this range. A lot more time. Just make sure you know what you stand to lose at all times. Every investment is risky. Bitcoin is considered a riskier asset than, say, the S&P 500 because it is still way more volatile than the S&P 500. Nobody knows what will happen in the future with any investment. But I can promise you, as long as the rich are rich, they're going to need to put their money into investments. They are going to need to buy investment vehicles. And they are going to buy the best investment vehicles that they have at the time of making the investment. So yes, it could all fall apart. Everything could go much lower. But in terms of where momentum is and in terms of, looking at, say, the next 20 years go off without a hitch, then I anticipate Bitcoin will be much higher in the future. As long as quantum computing doesn't happen or they get a fix to the quantum computing thing, which there already is. And then also there's another risk that Mr. Tudor Jones did not mention, and that's the BIP 110 risk. That is still a risk. That is a soft fork. I don't know about how far we are away from that soft fork being implemented. I haven't really kept up on that for the last 4 weeks because the last thing that I read about it, it was around September. Is when they were anticipating that soft fork would be a miner. It's when the miners would literally have to go ahead and encourage the soft fork. So that risk is still out there as well. Is it driving price action? I don't think so. I think what we're seeing driving price action right now are oil and the dollar. Those are the two risk leaders in my book. So we'll see what happens with it. Let me make sure I didn't miss anybody's questions and we'll wrap this baby up because obviously I think the majority of the day is over. It could continue to go lower, but I wouldn't anticipate a lot more lower and it could stop going lower. But we'll see. There is a two-part solution. Oh, Snap Powell just said energy not peaking. It hasn't. I mean, it isn't because it's moving up today, right? That's what I was saying. It might have peaked, but we won't know until oil rolls over. So until oil rolls over and moves significantly away from the highs, we have to say that it is still peaking. So that's all. That's all he's doing. He's looking at price the same way that we analyze it. It is still aggregating higher. As long as it is aggregating higher, it is still peaking. The peak isn't in yet. You won't be able to say that until oil comes significantly off. And, I mean, I don't see any reason for it to do so with the macro backdrop that we currently have right now. Dollar strong confluence 6'9" my suede or my dude. Yeah, the confluence changes. Inverse the correlation that the dollar and Bitcoin hold changes on a day-to-day, week-to-week, month-to-month basis. But on the macro, you can go back in history and basically see all of that confluence play out. And I think that it will continue to play out. As long as, I mean, time will tell if I'm wrong on that or not. But clearly something's going on. The dollar is higher. Oil is higher. Bitcoin is still in the range. So it could just be a matter of time here before Bitcoin starts ripping. And it could be a matter of time before oil starts to drop. Maybe Bitcoin loses the correlation between oil and dollar, that could happen as well, because a lot of accumulation is happening. So essentially, price will reprice aggressively higher once it needs to go look for supply, right? Once that supply is exhausted, or when the demand is just so great that Bitcoin's the repricing needs to go look for that supply, that's when the repricing will happen. It will probably happen when nobody's anticipating it, and it will probably be far more aggressive than we think it will be, because Saylor has locked up a huge portion of that supply. So that's why I'm fairly bullish from here. That's why I am long, and that's why I am looking for bullish opportunities, because I honestly believe that you're not far. You're just literally one news cycle or one day away from this thing potentially turning and burning. And all it's going to take really is for me to really be like more confident in that trade would be oil and dollar rotating, heading lower on a macro scale. That would be chef's kiss for Bitcoin, I believe. But I could be wrong. I've been wrong before. I could be wrong again. In terms of my Pingu short, I like to hold shorts on assets that do, if I'm going to be shorting an asset class, I want to short assets that have no value, literally no value. I've heard the Bitcoin argument that Bitcoin holds no value, blah, blah, blah. I find that argument, I ignore that argument. I highly disagree with that statement, with all of it. Highly disagree. I think billionaires have Bitcoin, and they're only going to continue to add more and more of it, especially when you have people like the likes of Paul Tudor Jones saying it's better than gold if you want to get your money out of, if you want to keep it from being inflated away from under you. So there are risks though, and that's why Bitcoin, when it rips, it will be a violent one, because it is volatile, because it is risky. These are the reasons that being long Bitcoin has paid off so well in the past, because of there's always something out there. In every bear market that Bitcoin's ever experienced, there has been FUD after FUD after FUD after FUD. Like, many reasons why Bitcoin was going to die. This is no different. It's just this time, it's quantum. So it's not Mt. Gox, it's quantum. But even then, Mt. Gox was what's going to kill Bitcoin, or it was Tether that was going to kill Bitcoin. Like, whatever the FUD was, it was always death and destruction and complete domination for Bitcoin longs. That was the message anyways. It's the same message today. Quantum computing is going to destroy Bitcoin. No different. It always happens like this. And people always get left behind. And then they end up buying the top. I don't want that to happen in my community. Period. I don't want my community to get left behind because they're listening to other people or whatever the reason. Because they're afraid or whatever. So I want you to have at least both sides of the coin. Yes, there is a potential that Bitcoin goes to zero. So make sure you don't sink all of your money into it. Right? Make sure you only buy it with an amount that you can afford to lose. So that way, if Bitcoin ends up being the wrong investment, okay, you took a hit, but it was just a small hit, not a massive hit. The people that try to get overexposed, they will suffer. They will suffer. All right, you have rate hikes and cuts, but they are not effective without. I read that already, and I agree with a lot of that statement. So yeah, I don't guess there's anything else for me to say. VIX is currently trading at 1790, so that means the VIX did spike a little bit on today's FOMC rate decision, and then it is backed up and it is back down to the open. The S&P 500 is back up above the open of the day, so the S&P 500 is actually heading back up to day highs potentially. The Pingu short has a long way to go. It's bouncing, and it has not rolled over. It rolled over at 12:30. That was the last time it put in a move lower. And so far, it's just been bouncing. So I don't know what Pingu's going to do. But if I'm going to hold a short, I want to hold a short on an asset that has zero value, zero worth. It's a meme token. It's utterly useless. I would rather short something like that. Bitcoin has value. There are billionaires that think it's the best asset in the world. So you don't have people saying that about Pingu or Fartcoin or Bonk or any meme token for that matter. And plus these things just move more sometimes. But Pingu's shaping up for a breakout here too. Yes, it made a lower daily low today, and tomorrow, obviously, if it wants to go lower, I will make money on that short. But it could continue to do what it's been doing. The monthly candle on Pingu looks far better than Bitcoin does. As you took out multiple months worth of highs here, and you are firmly still up on monthly highs. So this is what I wish Bitcoin looked like, to be honest with you. Because then we could look at a retest of this monthly swing to look for longs on Bitcoin, but we just don't have it. We just don't have it right now. So I'm going to continue to hold the Pingu short and continue to look for Bitcoin longs. Anybody else got any other questions in terms of risk assets? Nvidia looks fine. It pulled back off the highs a little bit here, but I mean, you made fresh all-time highs on Nvidia. So obviously, Michael, what's his name? Damn it. Michael Berry. His Nvidia short, not really working. And he's a doomer kind of guy as well, right? It looked good for him there for a little while, but not so much now. Right now, it kind of looks like he's kind of stuck. Tesla looks like it's kind of trying to build in an inverse head and shoulders here, but it did break and close under 4-hour support, so it might not be done yet. I don't know what's going on with Tesla, why it hasn't ripped. I think investors are waiting for the SpaceX IPO. I think that's what's going on here. I could be wrong. Circle Coin, all of those things are going to do whatever Bitcoin does. So if Bitcoin pulls back, they're going to pull back. If Bitcoin rips, they're going to rip. There's really no point in tracking those products. And for anybody that wants to lever up a Bitcoin long by getting long something else, I think you would be better served just buying Bitcoin, right? Because Bitcoin is the asset that people like, not the other things that track it. It's already speculative enough to be long Bitcoin. Because if all the Bitcoin maxis are right, and Michael Saylor has locked up the supply, and other billionaires are coming in strong, then Bitcoin's going to rip, and it's going to be a very violent rip. It's probably going to go much higher than any of us think it will go. So there's no point in levering that up by getting long MicroStrategy or whatever, right? That's just the way I feel about it. I think if you want to be long Bitcoin, then be long Bitcoin. Don't go out and buy, levered up ETFs or whatever. Now, if you're just trading, that's different. That is much, much different. Trading and investing, two different things. But I am invested. I am going to more than likely eventually invest in the STRC. As like I said, I have some money I need to put to work. So I'm actually doing my due diligence right now. If I decide to buy STRC, I will buy it live publicly. So that way everybody can see me do it. All right. And you'll see with how much and all that. So we'll see, but it's looking like that is the route I am going to take. So far, every meeting that I've had with lawyers and tax guys and banks and things like that have all pointed to, yeah, you can do it if you want to. I've been advised against it by one person, but he's more of a traditional money manager. He doesn't quite understand what STRC is in full. He is doing his own due diligence as well. Anytime you can offer any more than 5% yield it's going to sound ridiculous, right? It's going to sound like bullshit. But in this scenario, we actually do have all of the paperwork, and we can quite clearly see that STRC is not a scam. It is totally backed by an asset. It is actually, well, I was going to say it has more backing than the US dollar does, but it doesn't, because what is backing the US dollar? It's not just their word, it's also their warships, right? It's also that. The US does have quite a bit backing the dollar. That's why it's hard for me to think that the dollar's going nowhere or going to zero or whatever. Hard for me to think that that's going to happen anytime soon. All right. Hi, Heath. Any chance we could look at the ticker BTC M1SL? Yeah, we can look at that. I don't know what that is. I don't trade that, but I can look at it. M1SL. Yeah. Am I supposed to put a /? Looks like it. Yeah, I'm clicking on it, but nothing is happening. Is my internet connection bad or something? Yeah, nothing is happening. Oh, it's clogged up. All right, so let me do it on this. USD JPY still pushing up, guys. Yeah, USD JPY looks like it wants to run that previous monthly swing high. It's just last month's high. This isn't an all-time high, but it's a long-term high. In fact, Forex.com doesn't seem to have any more data. So, okay, so here you go with FXCM. Okay, so yeah, I mean, since 1986, it's a long-term high, is much higher. But right now, you're working at liquidating last month's high, and then you've got 161. So you might as well call it all-time highs. All right, let's try that BTC M1S thing. Yeah, I'm still not getting anything. If I can't get it on this, then I don't know what. It probably isn't an asset. Yeah, this does nothing either. I don't know what I'm doing wrong. What am I doing wrong? The symbol doesn't exist. Is it BTC USD? M1SL? Nope. BTC USD / M1SL. There you go. So it's BTC USD / M1SL. I don't know what you want me to look at here. This thing has no numbers on it. It looks just like Bitcoin, only with zero value. I don't know what I'm supposed to see here. And then let's talk with Vic. Boss looking at Pingu. It is very bullish. What was the trade idea of taking a short on it rather than a long? It was based on the narrative in the market being bearish or the cumulative deltas. Yeah. So to answer your question, and then I'll come back to this real quick. It was that. It was the deltas on the daily today. So obviously you're correct. Pingu is very bullish here. And like I said earlier, I did try a short on Pingu earlier in the week. That trade idea got stopped out. It wasn't a good or a valid trade idea. So this is a rounding top. It's been sideways for a long time. You see the difference? This is sideways, but staying away from the high until you rip. Pingu could rip at any moment, but it's just like the buyers were losing. They were just simply losing momentum. And then if you go earlier on into the day, so we'll go back in time. So I'm never looking for shorts near the bottom of the daily range, but I wasn't up until 7-ish anyways. So right through here, I'm looking at the chart. I'm looking at the deltas. The sellers are more aggressive. The highs have been lower. Lower high, lower high, lower high. Oil was ripping. Oil was ripping. It just made sense to be short. Or to look for the short in here. That's all. Yeah, you can see how the deltas are much more bearish than bullish here. But you could have taken that trade idea here too. So let's go back even further to show you that, yeah, it works. It just doesn't work all the time. So we have negative deltas here too. So we get short here. We want to see deltas continue to be negative. And there you go. Now you're negative, you're short. It looks like you're going to make money. Yay, everything's working out. And then this happens. Boom. You see what I'm saying? So just because the deltas are negative, it doesn't mean the short's going to work. Now, clearly, if you would have shorted the high of day here and then took profits on this move lower, then getting stopped out wouldn't have mattered to you anyways. And that's what I want all of my folks doing. If you're going to be a trader, then make sure you take profits. Always. Because you're never going to be able to predict what happens in the future. And all strategies work, they just don't work all the time. But yeah, the deltas is what prompted me to get short today. That's it. They were bearish. They were also bearish yesterday. So at one point, right? But then yesterday it even went up and made a higher high. Trying to short tops is not a good strategy, generally speaking, at any time. I would rather you focus on looking for something that has been weak for the majority of the week and is retesting the weekly open with negative deltas and all that. I would rather you look for those kind of trades than trying to short ripping highs. Ripping highs is a bad idea. Hopefully that makes sense to you. You need that. Yeah, I got that. Hit enter instead of clicking on it. Okay, got you. Long-term time frame market structure. Okay, so get rid of the USD. Just hit enter. Don't click on it. Okay, got it. Let's get rid of it. Let's try it one more time. BTC/M1SL. Enter. Yeah, there still is no values. So, I mean, what am I comparing here? Money supply, what? Yeah, it looks just like Bitcoin. The candles are identical to Bitcoin. Only there's no values. I don't know what I'm looking at. Or what I'm supposed to say. Sorry. Long-term time frame market. Monthly. Yeah, I mean, it's the same. No values. No comparison. I'm on BTC/M1SL right now. I am on that right now. I see no values. 0.08 is what I have. And because you specifically said to hit enter, I can't pick whatever over here. I don't know what it is. I mean, I don't know if it would, how it would be useful. Money stock, enter. Yeah, it's just nothing. I mean, it just looks like Bitcoin. It just looks like Bitcoin's ticker. Instead of being, traded against the dollar, it's against the money supply. I don't know how useful it is or helpful. I don't know. Is the bottom end for XRP and Bitcoin now? Come on, man. How long have you been with me? You know I can't answer that. You know I can't answer that. I don't know. Nobody knows. That's like wind moon. You should just say wind moon. XRP wind moon. Just say that from now on. And I'll say the same thing every time. I don't know. I don't know. I don't know. We can go look at XRP. What, rat? Shut up. My cat is loud. You scared me, dude. XRP. Yeah, it looks rough right here. Yeah, you've lost the 21-day. You've lost the 50-day exponentials. You never even got close to the 21-week. Oh, this is in a very strong downtrend, and I would argue it could continue. Now, with that being said, obviously, if Bitcoin rips, then these will too, most likely, right? But that's the caveat. Bitcoin must rip. If Bitcoin doesn't rip, then this most likely is going to make fresh lows. Big major key area of support on XRP, or at least has held for the last 1, 2, 3, 4, 5, 6 weeks, is 1.3268. I would anticipate that level probably does hold on the first tag of it, or the second tag of it. It's support. I mean, you spent some time trading under it, but couldn't hold it through here. I don't like that it's coming back to test it. So the more often you test the support level, the chances get greater as the odds increase that the likelihood of it breaking gets better, right? So generally, we want to see price leave a support area and then build in higher low support, as that indicates that buyers demand is coming up to get it. When you bounce and then go back to support, it indicates that if there are buyers, they're not as aggressive as the sellers are. Not conducive, but I mean, we can't see the future, right? It's this part of the chart that we don't know what's going to happen. Anything from here. So this is the trajectory of XRP in the future. Hopefully that helps. Like, that's what it's going to do. It's going to go that way. XRP is going to go that way. It's either going to go this way or it's going to go that way. One of the two, or both. Yeah. Bitcoin is the tide for the crypto market. If Bitcoin rises, some alts will too. Oh, the monthly. I did click on the monthly. I did click on the monthly, bro. I am on the monthly. You see? BTC/M1SL 1 month. There are no values over here. But even if there were values, I don't know what I'm looking at. I don't know what so when you do this, you're looking at a chart. So basically what you're saying is you want to see how Bitcoin is performing to M1SL. And right now it's not great, right? It's not great. So Bitcoin compared to M1SL isn't looking great. We could do all kinds of different things. Divided by, we could do minus MS1L or M1SL. See, there you've got values when you do minus, or you could do Bitcoin plus M1SL. And even here, you've got values on the monthly. But when you divide it BTC divided by M1SL, you have no values. So it's literally saying that Bitcoin divided by this is equals 0.08. So maybe let's see what MS or M1SL divided by BTC is. In this scenario, it's 1284. I still don't understand how I can't really do much with it. Unfortunately, I don't know what it even is. Is it money supply? I mean, I trade Bitcoin versus the dollar because I'm in America. All my trades are settled in USDT, right? Yeah, okay. Got it. Thank you. Lovely boss. I understand the values are off. Have a look at the candles. Okay. Look at the candles. Yeah, it looks like Bitcoin versus the dollar chart. Slightly, with some gaps. All right, you guys. Thank you all so much for your time. I do want to see Bitcoin stay above the strategy cost basis. I would love to see Bitcoin form support here today. I would love to see Bitcoin ripping tomorrow. I would love to see oil topping out and the dollar bottoming or topping out as well. But as of right now, everything looks like it wants to continue in the direction of the current week trend. Right now, Bitcoin's current weekly trend is looking lower. However, you are testing right or just under last week's midpoint. So it does look kind of bad. The next, if you lose today's low, obviously the next place to look for support is going to be last week's open. But I mean, I don't want to see it down there by tomorrow. But tomorrow could be the day that it does get down there if the sellers show back up. And they could show back up tomorrow. Pretty nasty looking daily candle. We'll see how it closes. You guys have a fantastic rest of your day. Sorry, my communication is getting mixed up. Don't look at the values. Look at the highs of the previous cycles. They all sit below the 2018 high except for the current one. That is different to the price action of BTC versus the dollar, which is higher highs cycle over cycle. Got it. Okay, thank you. That's basically what I was trying to say. I mean this, well, here, let me put it on log. Yeah, I mean, Bitcoin looks good long term, regardless if you're looking at it compared to the money cycle or M1 money supply or the US dollar. Long term, Bitcoin's chart looks really good for long term investors. When I'm looking for an asset to sink my money into, I want to put my money into assets that go from bottom left to top right. As long as they do that over a long period of time, generally last 10 years, last 20 years, right? Most of the time, people are looking at a 10-year trailing average. Is it making higher highs and higher lows respective to the 10-year chart? If the answer is yes, then I want to be involved. So even if we go back on Bitcoin 10 years, so we're in April 2026. If we go back to April 2016, is Bitcoin making higher highs and higher lows? Yes. Is it trending from the top left to the top right? Or bottom left, top right? Yes. Is it on log? Of course it is, because it's been so wonky. But even if you take it off log, is it still doing that? Yes, it is. It is still looking very good, very investable. So when I see a chart like this, remember, I don't care what the asset is. I don't care that the asset's name is Bitcoin. I am looking for long-term growth as an investor. That's what I want to see. I want to see that it can do that over a long, sustained period. The answer is yes. Is it volatile? Very much so. So that tells me I don't want to put my whole nut in it. I just want to put a portion of my nut in it. But I do want to be in it. It looks very good. Every pullback on this chart has been bought, and it has gone on to make higher highs. That has been Bitcoin's trend over its entire life cycle. Last 10 years and entire life cycle. Very investable. Very good looking chart. Super volatile over time. But fantastic returns when it turns back to the upside, which it always has. And if it is a true if it's truly driven by supply, then we know there is a supply shock coming for sure because of the halving and Michael Saylor. So basically that means just because Michael Saylor essentially has at this point in time saved the bear market. So now when all the new investors come in, if the new investors come in, it will go up. It will go up. That's if. Those are all big ifs. That's how investing works. 2018 high seems to be the same as when we were finding support now in this cycle. Yeah. So that was what I was getting ready to say, and I lost my track of thought because I'm rushing now because I got to go. But yeah, so how do I decide on making that purchase, right? So long-term investor, not a day trader. We're talking speaking specifically as a long-term investor. I'm looking for an asset to buy, to put some of my money in because I have money that I need to do something with. And I've already have all of it invested except this one portion. So that's what I'm looking for. So any random chart, any random ticker. When do I decide to buy? Well, I will go out to the weekly time frame and I will look at momentum. As long as for the last 10 years, that momentum cycle has done the same thing. As long as it has bottomed out at momentum and within 5 months to a year, bounced and started to go back to overbought. As I'm not looking at the price. I'm looking at this. Right? I'm looking at its ability to go from oversold to overbought, back to oversold, back to overbought, back to oversold, back to overbought, back to oversold. So is this a buying opportunity? Yes. That's my whole bullish argument right there for everybody on the internet, for the whole entire world. Does the asset go from bottom left to top right? Yes. For the last 10 years or lifetime? The answer is yes. Look at weekly momentums. If it cycles like this, then you buy. You buy the next time it does that or this. It's literally that simple. Does that mean that investment will work out in the future? No. No. But there's nothing that I can look at that will tell me if the answer to that is yes. That's my whole argument. There is nothing that I can look at that will tell me that it will work out in the future. It has always worked out when it got down here, though. So at least those odds are on my side. That pretty much goes for every investment. Every single one. Does this do it? Yes. Has it cycled to overbought, oversold, back to overbought? Yes. Yep, it's done it. Okay, good. I'll buy this one when it gets oversold too. You can do that literally with any asset. Anyone. Here, let's get off of tech. Let's go pick random asset. Okay, here's another good one. Has this one. Where's 2016? Let me get it on log. Yep. This is a good one. Oversold to overbought. Oversold to overbought. Long term, it never did get oversold. So when you got oversold here, it wouldn't have felt like a good investment. And I would argue, you could have taken profits, but it's a long-term investment. So you would still be holding this one, right? You would still be holding this one. It's not looking so good. It's not working out over time. And I'm not going to get the very bottom. I don't care if I buy in here. I don't care about that because my risk will be mitigated. If I'm buying it at $30 because it's oversold, which in this scenario, it would have got you in this candle. So you would have damn near caught the low. It has been back. Has it broken the low? Is it trending lower? No. So is your investment safe? Yes. Okay, good. I'm fine with it. It came back to oversold again. So it might be going to overbought now. Now it might be going to overbought. So there it is. That's all you got to do. Long term, look at momentum cycles with the chart. Bottom left, top right, check. Oversold, does it recover? Yes. It's a long-term investable asset. But you got to put a stop loss out there because you don't want to ride it to zero. You guys have a fantastic rest of your day. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading and investing, everybody. I'll see you guys tomorrow morning.